Hey guys, welcome to your new home of crypto and macro analysis. Now, I know that sounds pretty bold, but we've been doing this successfully for a while now in the private spheres of crypto. But with the way that the Federal Reserve is acting, the state of the economy, and what's going on in the world, what's being taught at our universities, or potentially not even taught, I'm done with the way this is being played. I want to democratize access to this information and bring you along on this ride with me. So whether you're absolutely new to finance, investing, crypto, curious about why the world is in such a tumultuous state and we see geopolitical tension rising, asset markets going up, inflation and the cost of living becoming ever more challenging, I'm going to be breaking down precisely what is causing these issues, what you can do to combat it, and how you can keep you and your family in the best position. So showing up here every day is going to be the best way that you look out for your future self. And I'm committed to bringing you information behind the scenes that you're not going to be getting elsewhere. Who are the market makers moving the market? Why are the Federal Reserve seemingly at the core of everything that's going on? What is this monetary system and how we just print money out of thin air? I'll be answering all this and more and explaining how you can really set yourself up in the future by understanding these basics, knowing how the game is being played, and then I'm going to propose to you that the best way you protect yourself is through digital assets, but I'll also provide you with some alternative because I understand crypto is not for everyone. In many ways, it's a massive Ponzi scheme. I'm not wearing jaded glasses. I do understand that, but stick with me. I'm going to be showing up daily and taking you through this stuff. So if that sounds good to you, hit the subscribe button, hit the like button, and let's jump in. So the first day I'm coming at you here is the 22nd of March. And yesterday we had the Federal Reserve say they were going to still be pricing in these interest rate cuts for the rest of the year. So you might wonder, why is this so relevant? You might not even have a background in macro, okay? The reason why is because we're in a strange world where the entire financial system is being driven by central bank policy, which even if you don't know the background to economics, potentially an attender should shoot up here and say, hang on, isn't this supposed to be a free market where the government isn't controlling everything that's going on in the markets? Yes, but we left that trajectory a long time ago when we started printing money in 2008 to combat the global financial crisis instead of letting assets crash and wipe out the wealth and savings of the baby boomer generation. So what we have now is a situation where all eyes are on the Fed and we're trying to gauge, are they going to be cutting interest rates, injecting liquidity, and giving us the signal to take as much risk as possible in this crazy world where they debase currency and asset prices go up? This is the end game, all right? We'll do whole other videos breaking down why they're doing this, the implications, different ways you can protect yourself. But for now, we need to realize this key thing to start with for the day. The Federal Reserve is signaling that they're going to be going into a next stage of their regime where they're once again going to be printing money, reducing interest rates, and that's going to lead to inflation. But they might not show up in terms of the numbers that get reported by your government. It might not be in your CPI. But trust me, you'll feel it when you try to buy assets and they're more expensive, or when you're at the fuel pump and your money's not going as far as you used to. So what we're going to be doing is whenever there are Federal Reserve announcements, we're going to be keeping a very close eye on what they're signaling and then explaining to you guys precisely the impacts we're going to have on the market. Now, when the Fed did signal yesterday that they're still expecting these rate cuts and to be doing quantitative tightening, well, reducing their quantitative tightening through the rest of 2024, despite inflation numbers starting to tick up, it really had investors a bit puzzled. I think many people, myself included, were expecting the Federal Reserve to come in a bit more hawkish on this and saying, look, hang on, we've seen some hotter inflation prints. We want to just hang on for a second. But Jerome Powell, man, he was chilled. He really just brushed it off and was like, nah, we're still going to persist with our intentions to cut rates throughout this year. So why is that relevant, guys? Well, I'm going to quickly show you a very, very interesting chart, which is the S&P 500. Now, this is, for those of you that don't know, an index of America's, essentially their largest 500 companies, okay? So it gives you a really good gauge of how the overall American stock market is performing. Now, what you do see here is that since 2020 and even longer, we've been in a massive uptrend in general. Yes, we've had some troubles since late 2021 when inflation peaked, and we corrected lower for a while. And this was scary when you were in it, right? But you can see that we're already at new time highs around 2 years later, okay? So, and this is part of the broader trajectory of the market trending up with time. Now, I'm going to encourage you guys as much as possible to think probabilistically about what's going to go on in the markets. Too frequently, Everyone is deterministic. They're saying, look, this coin must go up, this stock must go down, inflation must occur, but nothing must happen, okay? We live in a world of probabilities. This is shown even in physics. Like, I don't want to get too geeky with you, but even on the base level of reality, everything is probabilistic, and markets are no different. In fact, they really exemplify what it means to have probabilistic outcomes instead of deterministic. But what I'm going to do is I'm going to overlay this chart here with the global liquidity index. Now, this chart, the yellow line you see here, it's essentially a measure of liquidity in the financial system. The way that they get this metric is by averaging the central bank's balance sheet, okay? Now, we can dig into more depth what that means in the future, but for now, just think of balance sheet as money printing, okay? So when balance sheet goes up, they print money. When balance sheet goes down, they take that money out of the system. So you can see that here we had a massive uptick in March 2020, COVID times, and that was when we had a big injection of liquidity into the system and the markets responded. But that's not really what I'm interested in showing you guys here. I'm interested in showing you how these two separate variables, the price of the US stock market and liquidity, i.e. money printing, have such a high correlation. When liquidity goes up, the stock market goes up. When liquidity goes down, the stock market goes down, okay? And we can see that this relationship has been in place pretty much back since 2008. So if I zoom out here, you'll see that this trend has been going very consistently since 2008, but before it wasn't. So we're in a new world now, right? Where financial markets are being heavily driven by liquidity. And the reason why, if you look at where we are now, you might say very astutely, Joni, hang on, what's happening here? You're saying that financial markets are being driven by liquidity, but we're going up and liquidity is still here and down quite low. Well, the thing is, investors are forward looking. So although liquidity hasn't recovered yet, people like myself or much more sophisticated analysts, we live in the future, at least 9 to 12 months in the future. And if we believe that liquidity is going to be injected soon, right, we can act ahead of time. And that's why you're seeing markets at all-time highs while liquidity is still relatively at the lows. It's people pricing in the actions of the Fed. So this is why we're back here. It's people expecting the Fed to print more money and cut interest rates. And they've basically been complicit in that expectation. So connect the dots here. They are willing for this to happen. I won't say they wanted the markets to reach all-time highs, but they're very much complicit in them being there and accepting. All right. So we'll get into the implications of this stuff more in the future, but I want you just for now to realize this connection behind powerful interests concealed behind veils of power having a really influential impact on where markets, inflation go, and often not even talking about it, right? In the Fed's conference yesterday, they didn't even mention the markets being at all-time highs and crypto going wild. They really avoided it, but they're directly linked to this phenomena. Now, one of the key things of this channel is going to be trying to share with you guys how the way that you get out of this really challenging time financially is by backing the fastest horse. And that fastest horse is Bitcoin. Now, we are at all-time highs right now, pretty close to it. We've actually corrected. So we hit all-time highs last week, and right now we're correcting. We're going lower. So you can see that when you reach these areas of all-time highs, it's often time for some challenges and consolidation. That's just because the very simple reason that the market has a memory, right? So the market remembers getting to these prior levels, and people are somewhat traumatized by this psychologically. So we have to generally fight in these times a little while to break through. But I do think if you're completely new to these markets, you're being given a golden opportunity to participate in this next leg of the bull run. Now, just to show you what I mean, guys, I want to highlight what's happened every other time crypto has breached all-time highs. And if you're looking at this in the future, you'll be able to check how close I was to this prediction, but I want to take you back in time a little bit here. Okay, so if we do just scroll out on the chart, we can see that the last time crypto breached all-time highs was, and let me just put some lines on to really make this clear for you guys. So that was the previous all-time high, and we breached that in the end of 2020, all right? And we breached it around this period, just roughly. Give me that, right? Like it's roughly good enough, okay? Then from that time when we breached the all-time highs, we rallied up 3.4x in about half a year, okay? So you could be on the precipice of another really explosive time in crypto where we start occupying headlines again. People, your barber starts talking about it. People start making a lot of money on dog coins, which is already happening. All right. But be aware, man, if you're not in these markets, you're really missing out, especially if you're a bit younger. Okay. If you're younger, you need to be taking on some more risk. And I'll be painting out the picture for you over time why that's the case. But this is really just an intro to what we're going to be doing here, the bias we have. I think that's fair, right? Because you might just go off the bat, yo, this macro take, this finance, this crypto stuff, I don't like where you're going. And man, I don't want to waste your time then, right? I don't want you to waste your time. Okay, so the last thing we're going to check today is just how the broader market is going overall. And we can see that today we have some in the green, Casper, which is a different layer 1 technology, but nothing too crazy, right? So traditional world, they'll get pretty hard over a 14% up day. But in crypto, man, that's nothing. That's nothing. Any big losers? Floki, which is a meme coin, which is going to be a real theme with this channel, because I do want you to make those 10x, 100x gains, and I will be telling you how. And we see a lot of other memes correcting, okay? So this is just an intro to what we'll be doing on this channel, but please do come back tomorrow, subscribe, like, all that good stuff. We're going to be leveling up together, growing as a group, and I'm going to make sure that the early supporters of this channel are really well looked after with alpha, different sorts of information, and you're going to be doing your future self a massive favor, okay? So that's everything for today. I'll catch you tomorrow. I'm out.